we are handling cost of quality. So cost of quality is basically the methodology. Let me just maybe write as this is the first. This is a methodology that allows an organization to determine the extent to which its resources, this is the methodology that allows an organization to determine the extent to which its resources are used for activities that prevent poor quality appraisal, the quality of the organizational services, it's from internal failure and external failure. So we are saying cost of quality is a methodology that allows an organization to determine the extent to which its resources, the extent to which its resources are used for activity that prevent quality appraise, the quality of organizational services, which results from internal failure or external failure. So someone who is copying, this is a definition. The methodology that allows organization to determine the extent to which its resources are used for activities that prevent quality appraise, also the quality of the organizational services, which results from internal failure and external failure. And what are these costs? We categorize these costs. These costs are categorized. These costs are categorized into two. One, you have cost of compliance. Then number two, you have cost of non-compliance. And we need to start with cost of, what do you find under cost of compliance? What do you find under cost of compliance? Cost of compliance, in short, we are talking about costs you are going to incur to make sure that you produce or you offer quality service. That is all about cost of compliance. What are the costs you're going to incur as a company to make sure that you produce quality products or you offer quality services? Those are cost of compliance. Costs of good quality. That in short, cost of compliance, we are talking about costs of good quality. And under cost of compliance, we have number one, we have prevention we can also use prevention costs. And the cost of compliance, of course, for you to produce quality products or to offer quality services, you're going to make sure that you incur some costs that can help. What? Let me just define. What is prevention costs? These are costs. These are costs. These are costs incurred to prevent or avoid quality problems. Is my screen clear?
Yes.
Someone online, is my screen? Okay. So prevention costs, these are costs incurred to prevent or avoid quality problems. And here you may say they are planned and incurred before actual operation. So of course, for you to incur this kind of cost, you're not, if you start operation, any cost you're going to incur during operation is not actually prevention cost. We are going to see what kind of that cost. These prevention costs, those are costs that you plan to incur in advance before you start any actual operation. You're going to incur these costs in advance before you start operating. For example, such a costs may include product or service requirements. You need requirements before you start operating. Talk about quality planning. Talk about quality assurance. Talk about training costs. Talk about maybe annual competence. I can use annual competence assessment. Sometimes it depends on what you're offering. Before you start offering, they first assess. They first assess, are you in a position to really offer the best? So also it is part of the prevention costs. So these are some of the prevention costs you may need. We have also others. And remember, as you do your cost of quality report, you need to really be knowing what are costs you should put under prevention costs. So if you misinterpret, then you're going to fail. But we are saying prevention costs are costs incurred to prevent or avoid quality problems. So these are some of the prevention costs, and prevention costs fall under cost of compliance. Then number two, we have appraisal costs. Before I go to appraisal costs, any question about prevention costs? Any question, or we proceed?
We proceed.
Okay. Appraisal costs. What are appraisal costs? These are costs. These are costs incurred to determine the degree of mass spend companies incurred No, conformance to quality. These are costs incurred to determine the degree of conformance to quality measurements. In short, are costs associated with measuring and monitoring activities related to quality. For example, we talk about some of examples. For example, what are some of examples of appraisal costs? We have number one, verification, quality audits. Remember, when you're doing audit, the cost you're going to incur. Quality audits, supplier rating. You first assess to know whether the supplier is going to offer you the best. Talk about inspection. Inspection can be under quality audit. Inspection. Talk about process improvement. Talk about quality. Do we have quality assurance? Quality assurance tests. Among others. Here I used what for prevention? I used what? Let me check. For prevention, I used the quality planning, quality assurance. This is competence assessment. Then here it is annual accreditation fees. For annual subscription of CPA comes here, not prevention, it comes here. So these are some of the costs and appraisal category. Costs associated with measuring and monitoring activities related to quality. That is all about appraisal. Then number 3. Now you are done with these are only costs. These are only costs under cost of compliance. Under cost of compliance, you find there prevention costs and appraisal costs. So let's go to the next category, that is non-compliance. Non-compliance. Non-compliance costs. What are some of non-compliance costs? Non-compliance costs also, we have 2 categories. One, we have internal failure costs. And what are internal failure costs? Internal failure costs, these are costs associated with effects found before. This word before, that word is very key. Before the customer or the client receives the product. or service. For example, talk about, let me bring here examples. For example, uh, wastage, cost of wastage, scrap, rework, cost of redoing the work, or what we call verification or failure analysis costs. Talk about cost of expired, can be expired chemicals. All of these are costs. Just I'm not putting the word cost here. Correction of processing errors. The cost you are going to encounter violation of procedures. Internal. These are internal failure costs. The costs associated with defects found before the customer. This word, before the customer receives the service. This word is very key. That the workers they were not effective when they were producing, maybe adding ingredients. This is where you talk about wastage. They are wasting some of the raw materials. Remember, these materials you incur the cost. So any wastage, it is a cost to the company. Scrap, rework, rectification, that is like redoing the work. When you're doing the work, you're incurring the cost. Failure analysis, maybe you have failed actually to do what? You have failed actually to do what is right, and you want to do correction. You want to do correction. So all these are internal failure costs. Internal failure costs. You have produced, but you have not yet sold. You have not yet sold, or you have not yet, the customers have not yet received the service or the products. Those are your internal failure costs. And this arises because of non-compliance. If your workers are so efficient, if your workers are so skilled, they are going to utilize, they are going to do what is right to avoid all this. You're going, instead of using expired chemicals, you need actually to make sure that before you use any chemical, you first check whether this is expired or not. If you don't check, it means that at the end you're going to find that you're incurring this because of just non-compliance. You get? So these are internal failure costs. Then lastly here, we have external failure costs. We have external failure costs. And what are external failure costs? These are costs associated with defects found. Now the difference is here, found after. The internal is before, here it is after. after the customer received a product or so let's go to calculation. So the question is here. They are saying this is the university and evolved from a humble nothing institution. And now boasts of high quality services with its slogan quality costs, but benefits are exclusive and quantifiable. They are telling you this university operates the academic year on the semester system. Okay. Lots of funds have been invested in maintenance of quality. So as you're doing this question, actually your focus is related to quality. We are just interested in the costs of quality. But management feel that they have not yet reached the level at which they desire to be. They are telling you university generated turnover of this amount during the second quarter, ending 30th April 2019. The VC attended a global workshop on sustainability of universities in March, where cost of quality report and benchmarking costs were extensively emphasized as key engines of the growth of universities. The quality assurance controller presented in the management meeting the following costs which were incurred on quality maintenance during the second semester that ended 30th April 2019. So we have costs. These are costs. Your role is to know whether this is a preventive or appraisal or internal failure cost or external failure cost. Only that. So they are telling you you prepare a cost of quality report. Now, when you're preparing a cost of quality report, because at the end they are telling you at the end you explain to VC the effect of compliance costs. This was the typing error. You explain to the VC the effect of compliance costs and non-compliance costs on turnover. Yeah, you may change that. Effect of compliance costs and non-compliance costs on turnover. You are going to correct that. So, as we are going to answer this, but before we answer this, you need to just, for you, your role is to look at this cost. You ask yourself, where does this cost go? Let me present, let me share my workbook. My workbook. So we want to do our report. The cost of quality report. Here you are going to put here you can put you can create 3 columns. Here first column you put details. Then second column you put amount. Then last column, you also put amount. Okay. So we are going to start with what? Once you create your 3 columns, first column details, second column amount, then last column also amount. Because we want to also at the end, we want to base our explanation, our conclusion as we advise. We want to also rely on turnover. You start with turnover. Turnover. You put that turnover. No, don't put here amount, sorry. We are going to advise basing on the percentage. Put here percentage on sale. It is going to help us to give the advice. So the turnover is how much in the question? Someone with a question, how much is our turnover?
Our turnover is 1246 million.
1246 million. Then once you're done with turnover, here you go to now to your cost. You start with compliance. You start with compliance costs. Compliance costs. Under compliance costs, we have what? Under compliance costs, we said we have prevention costs. Now, with prevention costs, you're going to analyze the question now. You're going to analyze the question and list all the prevention costs in that question. Once you're done, I can also put here appraisal. I leave some space. I put appraisal costs. I leave some space here also. I leave some space, then I go to non-compliance costs. Because you want to, when you're reading, once you read the item and you find that it is non-compliance and it is under internal failure, you put it there. So I can first get my format, non-compliance costs. Under non-compliance costs, we said you find there what and what? You guys, you are quiet. You find there annual, rather internal failure. Internal failure costs. Then lastly is what? External failure costs. So as we interpret the question, when we find that the cost is prevention cost, we put it here. If the item is appraisal, we put it here. If the cost is internal failure, we put it here. If it is external failure, we put it here. So let's all get our question paper. Let's all get our question paper. We start with number 1, annual accreditation fees. Where do you put that?
Annual competence assessment is also under prevention, because these are things you have to do first before operation. So by doing this, you're preventing cost of maybe paying fine in the future when you're not accredited, or when you are not being assessed.
Putting it here. You know these costs, eh? And remember, once you mess up, everything becomes wrong. These are fees, and accreditation fees. Annual competence, it's a preventive cost. Then this one, annual accreditation, is actually an appraisal cost. What about correction of processing errors? Let's put some speed.
Hello, Abel.
Yes.
Looking at the question, I'm asking, okay, I'm taking you back to the turnover. Is it in million or in billion?
Which one?
The 1246.
One. You see, when you read, they said they generated the turnover of shillings 100. I think that's how it is. It is in a billion actually. The figure is in a billion. Just that what they said is 1,246 million. 46 million. A million has 6 zeros. That's why I'm adding this. You get it, eh?
Yeah.
Any other question? Let's go to another item. Correction of processing errors. Which kind of cost is that? Is it appraisal? Is it preventive? Is it internal failure? Is it external failure? When you check here under internal failures, these are costs associated with defects before the customer receives the what? The product or service. And actually I included, it was part of what? One of the example, correction of processing errors. So it is just here. So here you have actually produced, but you find that the process was not okay. You followed the wrong process. You want to correct. This is because of non-compliance. This is because here you are not evaluating. You are not doing what? It's actually a result of non-compliance. If it is a result of non-compliance, the question is it internal failure or external failure? So here we are putting correction. Correction of processing errors. How much? Someone tell me the figure. It's this one. Then the next item is correction of wrong tests issued to patients. Issued to patients. Correction of wrong tests issued to patients.
That's external.
Don't keep quiet. You are saying
External.
internal. Remember, we said the internal it is before the customer receives. External after the customer has received the product. Here you ask yourself, has the customer actually received the service? Yes. If they say correction of wrong tests issued to patients, it means that actually here we are correcting. You have already offered the service, but you are doing what? You are doing the patient has already received the service, but we are correcting. We are correcting. So here we do the cost you're going to incur to do correction of wrong tests. Issued to patients. This one, is it okay? Or there is something which is not clear? Then next, here actually the patient has received the service, but we are correcting wrong because of wrong test. Then next, cost of violation of procedures. Cost of violation. By the time you say violation, that is a non-compliance cost. Now, if it is non-compliance cost, is it internal failure or external?
That is internal.
Put it here. Cost of violation of procedures. And the figure is 14,320. Next, expired chemicals. Where do we put expired chemicals?
Internal.
Internal, because we are saying you need actually to make sure that you're using the right, you are using the right chemicals, not expired chemicals. If you use expired chemicals, that is non-compliance. You should use chemicals which are not expired. Next is what? Inspection expenses. Inspection. Now this one is not non-compliance. It is compliance, but is it preventive or appraisal?
Appraisal.
Inspection. This is monitoring and evaluation. Inspection expense. It is an appraisal cost. You are monitoring. How much is that? 18,010. Then the next item is parents' complaints. If it is a complaint, it is not compliance. It is actually non-compliance. Parents' complaints. Now the question is it internal failure or external failure?
External.
So we put here parents' complaints. Next is preventive maintenance contract. This one is clear. Preventive. So we put it here. Preventive maintenance costs. Contracts. How much is 25,987? Next is what?
No, it's 25,580.
25. Yeah, sorry about that. 25,580. Next is process improvement costs. Process improvement costs. Now this is where the issue is. Is it a preventive cost or appraisal cost?
Appraisal.
Appraisal.
So we put here process which is how much? 65, 424. Then next is quality assurance tests. These ones are clear. Quality assurance tests. It is 8 or 10. What about training? Training,
Preventive.
I put here training. Training, how much? 95 million. Do we have any other cost?
It's under preventive.
Hey, yes, what about this? This should be under preventive. And that's all about the question, but the fact that we need to explain to VC the effect of the effect of compliance costs and non-compliance costs on sales, we need to go ahead and complete this table. We get here now, we get total, go ahead and get total prevention costs. Then the answer you get, put it this side. You add and get the answer. That's what I have. That's what I have as my total. Actually, total don't bring it here. This column is for percentage. Total, put it here. Sum. Then once you have that, go ahead and get the percentage this side. How do you get the percentage?
Excuse me.
Yes.
Why did you put the quality assurance cost?
Here.
Oh,
Quality assurance costs, appraisal costs. When you check in our example, so we have quality audits, quality assurance tests, we have. So go ahead and get the percentage. How do you get the percentage? We need percentage. What are total preventive costs in terms of percentage on sale? To get percentage on sale, you're going to get this figure, this total, divided by total turnover, then multiply by 100. Get this, divided by this, then the answer you get multiplied by 100. What do you get?
I have 11.68.
If you round off to the whole number, you get this. Okay, I can leave my answer like this. Then I go to the next. Here you do the same, get total. Let me first, yes, get total appraisal costs. How do you get total? Sum up. Just to get the total here, add everything and get the total. Then you go ahead and do the same. get this figure, divided by turnover, then the answer you get multiplied by 100. I get this figure, divided by this, then I multiply by 100. That's what I have here. That's what you're getting?
Yes.
We'll go to next. Okay, before you go to next, now you can now get non-compliance percentage. Non-compliance costs. What is total non-compliance costs? You get total prevention costs, then add total appraisal costs.
But we are talking about compliance costs. You're calculating for non-compliance.
If you're doing what?
For you, you've called them non-compliance. Yes, we are on compliance.
that is typing error. Sorry about that. That is typing error. Sorry about that. Because we are still under compliance. So it is total prevention costs plus total appraisal costs. The total you get is total compliance costs. So this is our total compliance costs. What about in terms of percentage? In terms of percentage, I still do the same. I get this plus the one for appraisal. You have that? We do the same for others. Here we get total internal failure, costs. To get total internal failure costs, I sum up. Then to get in terms of percentage, I get this figure divided by total turnover. Then I multiply by 100. We proceed to total external failure. I sum this. But I need the percentage. So to get the percentage, I get this value. On your calculator, you get this value divided by total turnover. The answer you get multiplied by 100. I have this. Then finally, I look for total non-compliance costs. To get total non-compliance costs, I get this value, this total internal failure costs. I add total external failure costs. Then here, you do the same. This one divided by Okay, even if you don't want to do this, what you do, you just get total internal failure percentage plus total external failure percentage. And that's what you have. So the percentage of compliance costs on sale is 19.826%. Then the percentage of non-compliance costs on sale is 10.11%. So the question is, because they said you explain, they said you explain now the effect. What is the effect of non-compliance cost on sale? What is the cost of compliance cost on sale? So you are going to explain just using these percentages. Just say the compliance costs have 19.826% on sale, whereas this one non-compliance costs has 10.11% effect on sale. It means that you are going to actually incur that amount of money as you do your sales. Any question? That's all about A. Any question about part A?
Abel.
Yes.
My worry is on how you said once one of the costs you put it in a wrong category. The entire question you marked it.
No, the entire question cannot be marked wrong. Remember here they mark entries. They mark entries. Yes.
I was worried.
Just that here you are going to fail. Maybe you are going to just fail these ones. The totals will be wrong, but you are going to get some marks.
Okay.
But that's all about cost of quality. Cost of quality, you need to know that we have compliance costs and non-compliance costs. Then under compliance costs, you have prevention and appraisal. Under non-compliance, you have internal failure and external failure. Internal failure before the customer receive the service or the product. External failure when the customer has actually received the service or the product. Then these ones, you're compliant, but the question is that cost you're incurring, is it a prevention cost or it is just an appraisal cost? That's all. And to know this, it's a matter of really doing many numbers. Because sometimes you see, as we are working in different organizations. You find that for you in manufacturing, you know costs that the manufacturing company can incur, but you don't know the costs that the, let's say, banking industry can incur. That's where the challenge normally comes in, to know whether this actually the prevention or appraisal. But you can at least score some marks. Then part B about advising the challenges of direct benchmarking. Kindly do a Google search. Do a Google search, get a lot of points there. You are going to get a lot of, and these days you have even ChatGPT, even on WhatsApp you can just put, some of you have Meta AI, artificial intelligence, just Google and know more about this. We go to the next question. Which question? We said question what? Question 5. Question last question, eh? Oh, you are tired, we stop here. Eh?
Question 6.
Question 6. Changing Lives International was founded in the 1950s to improve the livelihood of vulnerable people worldwide. Okay, they have head offices in Ntinda, Kampala, where it rents a building of this amount of money per month and operate Just share the question to this person. They operate in a number of districts in Uganda. This company has 5 departments, with 3 focusing on main organizational business, that is health, social development, and education. This company budget is majorly donor funded by international agencies, and 3 focal departments are required to make annual budgetary savings to cater for rent and other sustainable development activities. This company still media international audit report for the year ending 30th September. You have this. And they are telling you the internal auditors indicated that the other departments just spent cash without referring to the budget. Internal audit recommended that this company adopts activity-based budgeting approach. You should be knowing the meaning of this instead of incremental. Activity-based, you're just incurring costs based on the activities, but incremental, you just adjust. You adjust your previous budget by increasing. But for here, it depends on the activity you are doing. Here you just increase, but here it depends on the what? On the activity you're doing, which allows a creation of budget slacks. Okay, activity-based budgeting is like the way you see ABC. The way you see ABC. Okay. This is still Rugambo. It is desired that the departmental budgets fit well into projects. So that's what you're going to be doing in your exam. You cannot just rush, because you may find that there is a hidden figure here around the certain paragraph. If you skip some paragraphs, then it will be hard for you. Always read the case study once. It can give you the idea to know where figures are. We have here, they are telling you it is desired that the departmental budgets fit well into project activities, so that project teams whose projects contribute to rent are rewarded. This word is very key, because your required part is to give the bonus. So you also need to take note of that word. It is desired that departmental budgets fit well into project activities, so that project teams whose projects contribute to rent are rewarded with a 13th check in case they exceed the set targets. And they are telling you the 13th check bonus is an equivalent of each year's last year month salary. So if you're looking for the bonus, that's how you're going to get the bonus. But to qualify for the bonus, you must you must contribute to rent. You must contribute to rent, and it means that by the time you are contributing to rent, you have achieved, or you have achieved your set target. During the year ending, this social development department in particular expects to get funds. Now you are dealing with this department, and we expect funds of how much? This one. To fund 2 projects in the districts of Buyukwe and Rwengo. And remember, your focus is on these 2 districts. This is what they expect. Remember, if it is a donor-funded project, your revenue is always come from your donor funds. So it means that this is like part of the revenue this social development department expect. But this money is for 2 projects. How are they going to divide? In the ratio of 1:1. So it means that a half. The districts have 21 and 26 groups, each respectively, with each grouping comprising of 10 members. So if let's say this is one group has rather one district, the districts have 21 and 16 groups, but the districts have 21 and 16 groups, each respectively. So it means that if you want to know the total you are going to get this times if you want to know the number of members, this is just one group. We have 21 groups, but each group has what? Has 10 members. Here you have 16 groups, but each group has 10 members. These 21 groups are in which district? The first district is Uyukwe. Then these 16 groups are in Rwengo. So if you want to know the number of members in Rwengo, you get 16 times this. If you want to know the number of members in Buyukwe, get this times this. Okay. However, each department is required to contribute 25% of what? Of companies' rent. Remember, once you contribute, you qualify for bonus. They are telling you summarize the projected expenditure for year ending this. You have project overheads, you have Buyukwe and Rwengo, you have training on group formation, you have training of beneficiaries, you have transport and per diem for. So this is just actually information to help you to use ABC. Because you don't know the figure the company has incurred to train on group formation. You don't know the figure the company has incurred to train beneficiaries in Uyukwe and Rwengo, but you have the number. You also have the overall amount. This is the overall amount. This one is the overall amount. This one is the overall amount, but not the amount for Uyukwe and Rwengo. Then here you have project staff salaries, you have also administrative salaries, but you don't know amount for Uyukwe and Rwengo, but you just know the overall amounts. Then you also have project inputs. You have project inputs, you have the number for Uyukwe and Rwengo. This is the rate per. Rate means 1. Eh? So if you want to know the overall amount, you get this time with this for Uyukwe. If you want to know for Rwengo, you get this time with this. So these are inputs. Remember, you have to incur the cost. Eh? You have to incur the cost. This is part of the money, the This is part of the money social development department is going to incur. They are going to incur on project inputs. They are telling you project staff salaries and administrative salaries. What is our staff? This is our staff salaries. Staff salaries, and this is our administrative salaries. They are telling you project staff salaries and administrative salaries are allocated according to income sharing ratio. What is our income sharing ratio? We are going to rely on this 1:1. So it means that when you're looking for salary paid to in line with Uyukwe, you're going to apportion. You are going to apportion this using income sharing ratio. Then administrative salaries are allocated according to project membership. So if you want, this is the overall amount, and you want to know which amount was paid to Uyukwe, which amount was paid in line with Rwengo, you are going to apportion using project membership. And we know that we can get project membership from here. In Uyukwe, we have how many members? 21 times 10. In Rwengo, we have how many members? 16 times 20. So actually, this number was testing you. Do you know ABC? Simple like that. Any question now? Because that's all. We are going just to use the knowledge of ABC to answer this question. Any information that I have talked about which is not clear before we start answering? So everything is clear, we start answering. Anyone to respond?
Let's start answering.
Yeah, we can start answering.
Actually, we are preparing a budget. We are preparing a budget, but using the concept of ABC. So what we are going to do, this is our social development. Social development. It was social development what? A department. This is social development department. We want to prepare our budget to align with, see how much, whether we are going to get benefit in investing in Uyukwe, whether we are going to get a surplus or a deficit. Okay, you are prepared. Remember, you have revenue, you have the fund, but you also know the cost. So as you prepare the budget, remember the budget, you must be knowing how much do you expect? How much do you expect as your funds? And how much do you plan to incur as you prepare or as you develop your budget? Those are two. You just need revenue, you also need expenses. Simple, that's how you do budget. But here we are budgeting for Uyukwe and Rwengo. So you put here also Rwengo. This is like our budget. So when you're preparing a budget, you always need to know that we start with what? Revenue. Now here, what is revenue expected? This is donor-funded project. They only expect revenue from donor funds. And how much? If you recall what they said, I think you have the hard copy.
750 million.
It is, we expect shillings 7. We expect shillings 750. Oh, sorry. 750, then 635, 900. That's what we expect. But this is for 2 projects, one project in Uyukwe and another project in Ruengo. So we needed to know now. We needed to know how much can we invest will be allocated into Uyukwe. Then how much will be allocated to Ruengo. And they gave you how they are going to share 1-to-1. So it means that here you are just going to get a half of this money. You just get this value divided by 2. Because if it is 1-to-1, it means that you're sharing a half. Do you have this? Numbers, let's do it together. If you get this divided by 2, I think you get this.
Yes.
Then next, when you're preparing, once you're done with revenue, you go to expenses, expenditure. Expenditure. How much do you plan to incur? Some of you were scared about this number, but it is very easy. It is ABC actually. Now, according to that question, we are incurring on what? We can start with actual project inputs. Before we go to project overheads, we can start with project inputs. And under project inputs, you need goods, you need there's names, you see this, you need bean seeds. So the question is, how much are you going to incur? Purchase this. How much are you going to incur? But how much do you expect to incur purchase this? In the question, you just have the number for Buyukwe and the Ruengo. You have also the rate. So to get the amount, you just get the number times the rate. So here I get the number for, I need how many goats for Buyukwe? I need 110. I multiply by the rate. The last column, which is 100. Are you all seeing that? Then I'm putting here wrong. Should be here. Then I do the same. I need 160 goats, but each goat is at how much? 100,000. So I get 160. I multiply by the rate, 100,000. How much are you getting?
16 million.
Hmm?
16 million.
If you have answer for this, tell me. I just copy. I just write answer. Or after understanding, some of you are just off now. Hmm? Should we
For
stop here? You have
Kroilas,
understood? Hey,
for Kroilas under Vuyikwei, it is 42 million.
then here,
It is
here
32.
you get 16 times, which is 32 million. Then here, for main
Seeds is
seeds,
21 million.
I
16
just
million.
wrote 21 million.
Yes,
Then here,
16 million.
16 million. Then bean seeds,
12.6 million.
4.6 million. Then here,
9.6.
we are done with project inputs. Then the next, we need to incur on what? On project overheads. For project overheads, you observe that we are going to incur on training on group formation, and stakeholder engagement. Then you also incur on training of beneficiaries in lobby and advocacy. Then you are going also to incur on transport and per diem for field visits. You also incur on project staff salaries. Also, lastly, you incur on administration costs. That's where you are actually going to. So the question is, do you have amount for this? What we have are just a number of trainings you want to do in each district. And you see in the question, they gave you the overall amount you needed to incur. So it means that you will need to do a working. You need to do are going to be working. When you're doing working, actually, you are looking for cost per what? You're looking for activity rate. And for you to get activity rate, you guys have studied budgeting. To get activity rate, you get what? Overhead divided by what? The cost driver. isn't it? Is it true? Or my knowledge has expired? You know, I have spent time without discussing these things.
Right.
So we start with, we are looking at activity. We are looking at activity. This is our activity. We want to train. Training on group formation. We want to train. Yeah? This is our activity we want to do. We ask ourselves, what is the overall for training? I can just copy this. You just tell me the figure. I don't want to waste a lot of time. You just get the overall amount, which is how much? 107
million.
million. Then you divide by now the total cost. The cost driver is the number of trainings, but what is the total? You get 36. 36 plus what? Plus 39. Do you have this?
Yes.
So it means that this is the cost. This is the cost per what? Per training. Per training on group formation. We can also get another thing. We can first get activity rates for each activity. We go to the next. Which activity? What is the next activity? Is to do training of beneficiaries in Europe and advocacy. So what is the overall overhead cost in the question? 239 million. I divide by the total trainings of plus 18. Do you have this? This is the cost per training for beneficiaries. Then the next activity is transport and per diem. What is the overall cost? 48 million 750,000, rather 715,000. I divide by the number of visits. The number of visits, 108 plus 132. Get that? This is per what? Per visit. Here we it is okay. Here it is per training. Here we are using per visit. Per visit. Then the last we have project staff salaries. How are you going to handle staff salaries? How are you going to apportion staff salaries? Remember they told you before actually this one is direct. This one we are going to use, they said project staff salaries is according to income sharing ratio, and income sharing ratio is 1:1. So it means that we are going to divide the figure by 2. Project staff salary, the overall amount is 87 million. So you get 87 million divided by 2. What do you get? I write that figure here. What do you get? 43
$43,500.
43,500. That's what you have? I do the same here.
Yeah.
What about administration? How are we going to allocate the costs? According to what? According to membership. Remember, in Ukwe, we have how many members? Then in Ruengo, we have how many members? In Buyukwe, we have, when you check in the question, we have 21 groups. We have 21 groups, but each group has how many? 10. So those are the number of members in Buyukwe. Then in Ruengo, we have how many groups? 16, but each group has 10 members. The total members are how many? I add. So I want now to get the activity rate. To get the activity rate, I ask myself, what is the administration salaries? What is the overall overhead for administration salaries? It is 75,372,700. Then I divide it by the total, that 370. You get the overhead for administration salaries divided by this total. Do you have this as your activity rate? This is per member, per group member. Shillings, that. So we have our activity rates. This is wrong, eh? Is this wrong?
No, it is right.
So let's go back at this side. Now we fill our table, because now we know the activity rates. Eh? When we are training, we have to incur this per training. We ask ourselves, how many trainings did we conduct in a week? We come this side, training on group formation. How many trainings on group formation in Ibuyukwe? It is 36.
36.
We are multiplying by our activity rate. Our activity rate, which is this one. You get the answer. That's what I have. You do the same here. Training is in Irwengo are 39 multiplied by the activity rate. Activity rate is here. And that's what you have. I have this. Then for trainings of beneficiaries, how many trainings? 12 times the activity rate, it is this one. Then here, number of trainings in Irwengo, 18 times the cost per training. Then I go to transport and per diem. It is equal to what? Now I ask myself, how many visits in Ibuyukwe? 108 times the cost per visit. Cost per visit is this one. The cost per visit is this one. I do the same here. How many visits in Ruengo? 132 times this cost per visit. What is left? Administration costs. Now, administration costs, remember, are based on membership. I ask myself, how many members in Buyukwe? How many members? How many? It's this. These are members in Buyukwe times the cost per group member. And I have that. I do the same here. I have 160 members in Ruengo, but I'm incurring this amount of money per group member. We are done. We are done. That's all. Do we have any other cost in this question? So you can sum up, get total expenditure. Total expenditure. Someone may say, what about rent? Rent is for social development department. Not you can Ruengo. Find that you have a surplus, you can contribute. If you contribute, I'm saying if you find that you have a surplus, you can contribute to rent for social development department. And once you contribute to that rent, you're going to qualify for bonus. So you cannot bring here rent because rent is not allocated to this. It's not allocated to Buyukwe or what. So I just need total. I need total expenditure. I sum up here. From here up here. That is my total expenditure. That is my total expenditure. I have expenditure. Total expenditure. I have also revenue. So you can go ahead and get budget surplus, or deficit. If it is a negative, it will be a deficit. How do you get that? You get your revenue minus your total expenditure. Here we have a surplus. What about here? I get this minus this. And that's what I have. But are these figures correct? Are these figures correct?
For training on group formation.
Are these figures correct? Eh? As if there is we
You made a
neglected
mistake on training on group formation.
the amount was above. Eh?
Yes, it is 51 with 55. So you add a 0.
I need to add a 0. Means the mistake was this side maybe. It's changing anything, not sure. So here you just multiply by 10. You have failed to see where is my mistake. The figure should be like this, eh?
Yes.
Adele, the problem is on rounding. When you round, you get the answer which you had. But if you don't round off, you get this one, 51.
Hey, the figure
Yes,
is on. That's where the challenge is.
yeah.
But the rounding actually it is 1,400,000
Here, eh?
That is where the
Or to
problem is.
So the issue is there.
The issue is,
I have seen. You see here,
You forgot a zero.
I didn't put another zero.
Yes.
Right? This figure, I think
Yes,
that's
you're
what.
missing a zero.
and for me, I have the right answer.
So it should be like this. Ah, perfect. I had neglected the zero. So it means that here we have what? We have a deficit, but here we have a surplus. So the question is, who is going to qualify for bonus?
Where do you get a deficit from?
The deficit, you see, if I add these values from here, if you add total expenditure, this plus this plus this plus this plus this, you get this, eh? Isn't it?
Let me re-add mine because you seem not to tally.
Because you see this figure is lesser than this. Maybe rounding go forward, but figures should be the same. Let's try to finish up. Once you get a surplus and a deficit, it means that now we need now to ask ourselves, or social, what is social development contribution to rent. You need to know that this is just a department. Social development is a department. And this rent we are talking about is actually the company's rent. CLI's rent was how much in the question. When you check in the question, what was the rent? What was the rent? It was 100 what? 102? The first, it's 102. You see the first paragraph where they said CLI has a head office in Ntinda, Kampala, where it rents a building at 8.5 million per month and operates in a number of districts. That's where you're going to know the rent. So if you want to get the rent, what do you do? That is 8.5 per month. 8.5 per month. If you multiply, we are doing it for the whole year. If you multiply by, if you get 8.5 million times 12, we are going to actually get 102. Are you in a position to click this? They are incurring 8.5 million per month, but remember the budget is here for the whole year. The budget is for the whole year. So how much are they going to contribute? SDD, Social Development Department, is going to contribute 25%. That is the target to qualify for the what? For the bonus. So this is SDD. So we'll get 25, 0.0 times this. That should be that should be our contribution. And the contribution per manager, contribution per manager, per project manager. Project managers, we are talking manager for Buyukwe and Ruengo. It's according to the ratio. If you want to know the contribution per the contribution to rent per manager, this is for the department. But what about per manager? Per manager, you divide by 2 because the ratio was 1:1. So if you get this and you divide by 2, what do you get to this? So per manager, that is a contribution. This figure. So per manager, that's what we expect. But remember, colleagues, you cannot contribute when you have made a loss. You cannot contribute when you have made a loss. Like now this one, you are supposed to contribute to this, but you have made a loss. This one, at least you see the person, this manager is in a position to contribute because the contribution is less than what is less than the money available. So the question is, who will qualify for the bonus now? Who will qualify for the bonus? Project manager, project manager in Buyukwe will qualify for a bonus. Will qualify for a bonus. And the bonus was what? What was the set standard for the bonus? To give the bonus is how much? When you check, they told you the check, the 13th check bonus is equivalent to each year's last month's salary. So we ask ourselves, what is project staff?
Next session. Hello.
Yes, yes.
My network disturbs me, but I went off when we were on social development contribution rent. How do you get the 102?
102. This one,
Yes.
is Remember, when you check the first paragraph, there is where they said CLI has a head office in Ntinda, Kampala, where it rents a building at shillings 8.5 million per month. Remember, when we are doing the budget, this is for the whole year. So to get the rent for the whole year, you get that rent per month times 12. You will be in a position to get this. Is it clear now?
Yes.
Then once you get this, you ask yourself, each department, SDD is supposed to contribute a rent of this. But now the question is, what will be the contribution on rent per project manager? Our managers are the manager for Buyukwe and the Rwengo. We expect each manager to contribute to this and this according to the set standard. But this one has made a law, so you cannot contribute. It means that if you have, and the bonus was what? If you are in a position to contribute, there was a statement where they said it is desired that departmental budgets fit well into project activity. So the project teams. What are project teams? These project managers. So that the project teams whose project contributes to rent are awarded with a 13th check in case they exceed the set standards. Now, to know the set standard, now this is the standard. Have you achieved? Are you in a position to actually contribute to rent? Here you cannot contribute because there is a deficit. But this one, he can contribute, so qualifies for bonus. Project manager in Buyukwe will qualify for a bonus, but the bonus, they told you the bonus is equal to 1 month salary. So the question is project staff salaries. We said in Buyukwe it is this. This is the overall for the whole year. This one is for the whole year. This one is for the whole year. But we need for 1 month. Bonus is equal to 1 month. Equal to 1 month, 1 month staff salary. And to get 1 month staff salary, what do you do if you want to know the bonus now? What do you do?
Can't you divide it by 12 months?
Yes, this is for 12. This is actually, these are actually 12 months, but we need it for 1 month. So to get this figure, divide by 12. And that will be your bonus. Was the question hard? MDC questions, friends, MDC questions, they are not direct. They are not direct. You need to be very sober. You need to be very sober. You know the idea, you know actually ABC, you know everything, but when you change the required part, people are not aware.
Abel,
What
I
to
don't
do.
know.
So you need to, as you interpret the question, you need also to relate it to Wanji.
No, Abel, I understood something I had missed. But
Any
I'm
question?
not- No.
So that That's all about question